The Afghan army has failed to provide any resistance or very little resistance for whatever reason. On this, we all made an incorrect assessment.
I stand squarely behind my decision. After 20 years, I've learned the hard way that there was never a good time to withdraw U.S. forces.
Afghanistan will also need its own manpower, and Europe alone cannot assume the consequences of the current situation.
The West should hang its head in shame as we abruptly abandon Afghanistan to what will now be a civil war after 2 decades of effort.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 17th of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Taliban announces an amnesty after its takeover of Afghanistan in an attempt to calm the chaos as people try to flee their rule. Joe Biden defends the withdrawal of U.S. troops from the country. A single case of COVID-19 sends New Zealand into a nationwide lockdown. The country's currency slumps 1.5% ahead of the 3-day shutdown. And after the total value of cryptocurrencies rose again above the $2 trillion mark this week, we will speak to the chief executive of the world's biggest crypto exchange, CZ from Binance, joins the program. If you have any questions for him, IB Plus TV Go. Now let's get straight to our top story, and world leaders have expressed their dismay at the chaotic scenes coming from Afghanistan. The U.S. exit has caused a political firestorm. Chaotic scenes at Kabul airport, followed by the Taliban's rapid advance, ending with the taking of the Afghan capital. Now, President Biden fought back against the criticism he's faced from across the political spectrum.
I stand squarely behind my decision. After 20 years, I've learned the hard way that there was never a good time to withdraw U.S. forces.
At this grave hour, I urge all parties, especially the Taliban, to exercise utmost restraint.
What we want to do is make sure that we as the UK pull together our international partners, our like-minded partners, so that we deal with that regime in a concerted way.
The Afghan army has failed to provide any resistance or very little resistance. We all made an incorrect assessment, and this wasn't just a misinterpretation on the part of the Germans. It was widespread.
In time, Afghanistan will also need its own manpower, and Europe alone cannot assume the consequences of the current situation. We have to anticipate this and protect ourselves against significant irregular flows of migration.
Well, we're covering the fallout from across the world. Joining us from Berlin is Bloomberg's Maria Tadeo. In Doha, where talks on a formal handover of power to the Taliban may take place, is Simone Foxman. So, Simone, what exactly is the latest from Afghanistan? Are there peace talks, or is there any kind of power-sharing agreement possible?
Yeah, well, it does sound like we may see a delegation come to Doha as soon as today. A group of former politicians calling themselves the Coordination Council, Hameed Karzai, a former prime minister, as well as Abdullah, who had been the chief negotiator between the Afghan government, the internationally recognized Afghan government, and the Taliban, as talks were going on in Doha before the events of the past couple of weeks. They'll also be joined by a former leader of the Mujahideen. So we're looking to see when these folks get here, but we do understand that this may be in the cards. We're also seeing a much calmer picture at Hameed Karzai Airport, where planes are taking off, according to various witnesses and various news reports. We understand the Pentagon has restarted its evacuation efforts, so we are not seeing the same repeat of those chaotic images that we saw yesterday, Francine.
Maria, we've also heard from some European leaders. What are the immediate ramifications here for the EU? I guess they worry about refugees.
Yes, and Francine, they worry about what is potentially now turning into a humanitarian migration crisis. Of course, this is an election year in Germany, and it will be an election year in France next year. The other thing that is quite striking is to see that the tone was so different. You know, you had President Biden yesterday say that this was a correct decision, doubling down on the exit, but Angela Merkel painted a very different picture. She said that this was a very bitter moment for the German forces, that this was certainly a step back, and also said that it had been a product of a widespread misjudgment on the situation on the ground. She didn't specifically blame the United States, but did go for that word, widespread. This wasn't just Germany. This was on the international scale. Now, going forward, you know, we do know and we have seen that the evacuation operation continues. The planes are now landing. The Germans, however, taking a lot of heat for only being able to evacuate 7 people out of Kabul yesterday. And European foreign ministers meeting today in terms of what kind of action will be taken forward and whether or not they recognize any potential government that may come out of the talks in Afghanistan. And Francine.
Thank you both for joining us this morning, Bloomberg's Maria Tadeo and Simone Foxman. Now stay with Bloomberg Surveillance Early Edition, because later on this hour we also speak to the chief executive and founder of the world's biggest crypto exchange. CZ from Binance joins us shortly. If you have any questions for him, just IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, New Zealand is entering a country lockdown tonight after reporting a single case of COVID-19. It's the first community-transmitted case since February of this year. But after the country's successful COVID containment strategy showed signs of being breached, its currency has increased as much as 1.5%. Now, as a wave of negativity from the Asian session has also transferred to Europe this morning, stocks sliding for a second day from Friday's record high. We're now joined by Anne-Catherine Peterson, investment strategist at Allianz Global Investors. Anne-Catherine, thank you so much for joining us. I mean, I guess the focus is on Jay Powell today and then Jackson Hole, but the focus is also on some of these lockdowns we're seeing in Asia and the impact it has on global growth.
Yes, absolutely. Those are two factors that will shape the outlook for markets going forward, also in the second half of the year. On the one hand, a monetary policy and also monetary policy divergence with the Fed tapering imminent. And on the other hand, for example, the ECB still sticking towards its very dovish stance. And then on the other hand, the outlook for global growth. And one of the major risks towards the global growth outlook remains the pandemic situation, including the spread of the Delta variant. While it may not be as economically damaging as previous waves because of the successful vaccination rollout in many countries, it still is a reminder that the global economic recovery will remain uneven, in my view.
Uneven with who's powering ahead, Anne-Catherine?
Yes, so the US economy has been powering ahead already, and peak momentum seems to be approaching in the US. On the other hand, we do still believe and stick to our view that Europe is catching up and is already in the fast lane in terms of economic growth momentum. On the other hand, when looking at China, we do see a continued moderation in growth in China. And the latest data confirm this view. The Delta variant is one reason, but just one. And therefore, looking ahead into the second half of the year, diverging also economic policies in China, where the US will likely remain an important macro theme, with the Chinese economic authorities or policy authorities inclined to ease policy.
Anne-Catherine, what does that actually mean in terms of how you play the market? So if you look at some of the divergence out there, is it dollar supportive? Do you play the rate divergence, or do you play industries?
Well, I think very generally we have a trimmed risk compared with the last quarters, as we think that the 5 peaks, so peak cyclical momentum, for example, but also the peak in monetary policy stimulus will provide less impetus to markets in the second half of the year. Now, in terms of FX, of course, the transatlantic spread between the US on the one hand and the Eurozone on the other hand, taken by itself, may be supportive for the dollar, but I would be a bit more cautious here because there are a couple of other factors, including the superior growth momentum in the Eurozone, but also structural factors such as the twin deficit in the US. And the Biden fiscal stimulus packages will, of course, even worsen the fiscal situation of the US economy that put a damper on, or at least limit the upside potential for the dollar, in my view.
Anne-Catherine, is there anything else that actually looks oversold right now? Or is there anything that makes you nervous about things to come? I know we've been talking quite a lot about China regulation. At the same time, the S&P 500 was at a record high yesterday.
Well, clearly the markets will turn out choppier in the second half of this year. But even if we do see peak economic momentum, also on the global level and including Europe in the third quarter, and less policy stimulus ahead. Let me just let's remind that there are 2 factors that will continue to prop up markets and speak against a major setback in the markets, and namely the fact that earnings and economic growth remain at a high level. So this is one factor. And then also the policy stimulus, even though it is peaking, remains in absolute terms accommodative.
And Catherine, do you worry about some of the policy mistakes, maybe from the ECB? I mean, I was looking at some of the bonds. It was interesting to see the spread between the Italian bond yield and actually German bunds to actually narrow, with Commerzbank saying they could be at 75 basis points difference. Are we going to see that narrowing continue until there's, until I guess there's a mistake or we see inflation?
Well, in the Eurozone, the peripheral bonds clearly remain supportive by the dovish shift of the ECB. And just looking at the ECB's newly phrased forward guidance, this clearly is a reminder that rate hikes will not happen anytime soon. The peripheral bonds, including Italy, also remain supported by the EU Recovery Fund, and the first disbursements have taken place as well. And the EU recovery is widely seen as a step towards a more uniformed fiscal integration in the Eurozone. Overall, I don't see a risk of a policy error here. Where I rather would see a risk of a policy error is in the United States, because the Fed could err on the side of keeping its policy too loose for too long. Because of its newly introduced average inflation targeting regime, which includes a phase of inflation overshooting in the United States. And one of our convictions is that the medium-term risks, upward risks towards inflation, remain skewed to the upside. And this is a belief that markets don't seem to share. Looking at the Global Fund Manager survey that came out just last night, it's still 65% of the investors that were surveyed that believe that inflation is simply transitory.
Yep. Wonderful. Thank you so much, Anne-Catherine Peterson there from Allianz Global Investors. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. There are now 1 million job vacancies in the UK as loosening coronavirus rules led to an unprecedented scramble for staff. The Office for National Statistics data also shows average earnings in the 3 months to June surging a record 8.8% from a year earlier. While the figure partly reflects distortions created by the pandemic, underlying wage pressures are also gathering pace. The number of people dying with COVID-19 in the US hospitals is hitting previous highs in some hotspot states with lower vaccination rates. In Florida, an average of more than 200 people a day are dying with confirmed or suspected COVID, matching the state's November peak. Louisiana, Arkansas, and Missouri have also seen fatalities soar in recent weeks. Malaysia's king is reported to have called the leaders of at least 4 political parties for a meeting following the resignation of Muhyiddin Yassin as prime minister. The palace says Muhyiddin will stay on as a caretaker prime minister until a successor is named. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thank you so much. Laura, right here in London. Now, coming up, Michael Burry bets against Cathie Wood. The investor made famous by The Big Short takes aim at one of Wall Street's hottest stars. We discuss 13F filings up next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's Michael Burry versus Cathie Wood. The latest 13F filings show the two cult investment figures are now at opposite ends of the same trade. But who will come out on top? Let's get more with our Danny Berger. Danny, this is one of actually the most amazing stories of the week.
Yeah, and I have to say, Francine, that kind of what's important here is that Michael Burry is putting his money where his mouth is, because this isn't necessarily kind of a new thesis or posture from him. Back in February, for example, he tweeted that Cathie Wood's promise of really transformative innovations wouldn't come to fruition. He then deleted that tweet. But this is the first time we've seen in regulatory filings in 13Fs that he's bought some put options against ARK. Now, previously, he did have some Tesla puts as well, so that also kind of indicates how he feels about Cathie Wood's bet on Tesla, which is the biggest holding in ARK. He did up that position, so currently it stands at about $731 million worth of these bearish options. ARK is about $31 million. But Francine, just to kind of put all of this in perspective, this is 13F filings, so it is at the end of the last quarter, but also these filings don't show short positions. So it is entirely possible that Burry has an even more bearish posture towards these funds that we just don't know about yet.
I mean, that's pretty incredible. Both Wood and Burry are cult figures in the investing world. So how does it shake out? Is it just a matter of actually price action, really?
Yeah, I mean, absolutely, Francine. You hit the nail on the head. And I did, one of the first things I did when I saw this was, of course, look at Wall Street bets. And I have to say, if we're going to use that as a proxy for the retail crowd, they are really divided because they really like Michael Burry. He's one of the first people to have this really massive position in GameStop, but also Cathie Wood's. I mean, you have Tesla, you have Palantir. These are all retail favorites. And for a very long time, the retail crowd and investors alike just poured their money into ARK. Last year, about $1 billion of inflows into this ETF. But if you look at what's happened over the past couple months, about $500 million gets yanked out of there. So what we're seeing is not necessarily a turn in posture against ARK, but it really is a bifurcated market, Francine, of people who really like tech, who like these big cash-rich companies, maybe are concerned about the Delta variant, so want to stay in there, and people who think a cyclical uptrend is going to happen. So Burry v. Woods, it is a nice snapshot of just one instance of this bifurcation, but I have to say, this debate, as you know really well, is happening across the entirety of the market.
Yeah, you're absolutely right. Of course, distilled, though, in these two titans.
Exactly.
Danny, thank you so much. Our Danny Berger there with the very latest on some of these 13F filings findings. Now, Anne-Catherine Peterson from Allianz Global Investors still with us. Anne-Catherine, I don't know whether you actually have a strong view on technology stocks, but what Danny was just talking about is fascinating, and it kind of distills the bifurcation that we're seeing in the markets.
Yeah, it is. I think generally on tech, of course, this relates to the classic value versus growth debate. But growth-friendly sectors that are meant to be or seen to be innovative drivers also for the next decade, including tech and also healthcare, are still attractive, in my view, in a broad-based, diversified portfolio.
Anne-Catherine, when you look further out, I mean, do you have any investments in crypto or any, attachments to crypto, or are you studying crypto?
It's, of course, a theme that we continue to monitor, but I wouldn't deem it as an asset class that we, as investors, invest in at the moment.
Anne-Catherine, if we go back to the main really question underpinning every market that we're seeing, it's of course inflation, what we'll hear from Jay Powell. If you look at the inflation numbers so far, I mean, you do see a rise, but it's not as broad brush as maybe some people would want it to be to absolutely say that, you know, they're getting it wrong on inflation, that central banks are getting it wrong. You know, when do you make a safe bet on when the Fed is tapering at the moment, and how much of it is already priced in the markets?
I think the market is expecting that the Fed will announce a tapering anytime soon. What it depends upon, and the Fed has made this very clear also at the last FOMC meeting, and the minutes released tomorrow will shed further light on this, is regarding its dual mandate. They still want to see for more progress on the labor market. So they are more closely watching the labor market here than the inflation pictures at the moment. And regarding last month's jobs report, this was much better than expected, but the Fed will probably wait and see for this momentum to be maintained in the US labor market. And there are two factors that could be at risk here, or could pose a risk here for the further recovery of the labor market. One is the spread of the Delta variant, which may lead to further US Americans still waiting to participate in the labor market, because we do have this huge gap. And the other factor clearly is the expiry of the unemployment benefits.
Anne-Catherine, thank you so much. Of course, from Allianz Global Investors, Anne-Catherine Peterson. Stay with Bloomberg Surveillance Early Edition. Up next, we speak to the chief executive and founder of Binance, CZ. This is Bloomberg. The Taliban announced an amnesty after its takeover of Afghanistan in an attempt to calm the chaos as people try to flee their rule. Joe Biden defends the withdrawal of U.S. troops from the country. A single case of COVID-19 sends New Zealand into nationwide lockdown. The country's currency slumps 1.5% ahead of the 3-day shutdown. And after the total value of cryptocurrencies rose again above the $2 trillion mark this week, we'll speak to the chief executive of the world's biggest crypto exchange, CZ from Binance, joins the program next. If you have any questions for him, just IB plus TV Go. So good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 17th of August. So let's get straight to talking crypto with our very special guest. We're joined by CZ, founder and chief executive of Binance. Now founded back in 2017, the company is the world's largest cryptocurrency exchange by volume. Its size and decentralized nature has made it a target of regulatory scrutiny over the past few months in several jurisdictions, including Britain and the U.S. Well, CZ, welcome to Bloomberg TV. Thank you for joining us. When you look, CZ, at some of the regulation challenge that you have out there in various parts of the world, what will happen in China, given the crackdown that we've seen on financial firms, on tech companies? Do you think crypto's next?
I think crypto was there before, so they were cracking down crypto miners before. I don't know what's going to happen next. No one can really predict that. But yeah, I think China no longer a lot of crypto activity going on. Exchanges were out since 2017, and then the miners are out last year or this year. So yeah, I don't think there's a lot of activity going on there.
I mean, for regulation in the U.S., is there anything, CZ, that you're doing to try and get regulators on side? First of all, we know what happened with the infrastructure bill, of course, on the taxes, which was a little bit of a blow to cryptocurrencies. And then we also heard from the SEC chairman recently.
Yeah, I think, when the new regulations come into this industry, I think U.S. is very mature on the crypto regulation part. They're leading now. They have a cryptocurrency exchange listing on NASDAQ, which is very positive. I think as new regulations come in, many of them will be somewhat restrictive, and that's kind of expected. But over time, we do think that regulations will adjust with our market demand, and hopefully will get better. I do believe the first iterations of most regulations will be somewhat restrictive. That's what regulations are. And then hopefully it will adjust over time.
I mean, they can be restrictive, but do you think they're unfair?
That's very hard to tell. Like basically, yeah, if you're a crypto miner or if you, that's very unfair. So I think fairness is a very has a perspective to it. But I think what's important is though regulations should really keep in mind of technology innovation. Crypto blockchain is going to be, I believe, is bigger than the internet. So killing innovation in a certain jurisdiction will have very long and far-reaching financial impact, negative financial impact. So hopefully we can avoid that in all the places in the world.
Cici, how much of your time actually do you spend thinking about regulation or how to change Binance so that it's actually seen as positive by regulators?
So now I actually spend most of my time doing that. I would say probably 80% or more. So this is one of the very few top-down driven initiatives in Binance. We're going through a pivot from a technology innovator into a financial services company. So we need to be fully compliant. And I believe right now, all the regulators around the world view crypto as financial instruments, one way or another. They understand it is valuable, it is money. It represents financial transactions. And as a technology startup, we need to pivot into a financial services company. And this type of pivots are very difficult to do. So I'm spending almost all my time on it. And yeah, I'm not really involved in the day-to-day operations of the exchange. I'm really just thinking about executing how to do it.
And so as you go through that pivot or try to go through that pivot, do you have like a 3 number of priorities that you want to get done in a certain amount of time to make sure that you're on track for the pivot?
Sure. I think on top of my head, there's a few different things we have to do. Number one is we have to hire a lot more people. So we need to hire people with a regulatory compliance experience, very senior people that can bring teams in. So we need to significantly continue to increase the size of our compliance legal teams. The second thing is we were shooting for the decentralized organizational structure, which does not work with regulators. For example, when regulators ask us, where's your headquarters? We say, well, we don't have a headquarters. We used to say that. As you can imagine, that causes a lot of problems. People think we're dodgy or stuff like that. So now we're establishing headquarters, proper structure, proper governance, proper audits, etc. Third, most importantly, we need to make sure all of our products are fully compliant, meaning that some of the products are not welcomed or not allowed by regulators in certain places. So this is why we've been limiting our futures derivatives products in most of Europe and some parts of Asia as well. And then we need to apply for licenses, and very important for us to communicate with the regulators, request for regular meetings where we proactively update them on what we do. So there's a number of things going on there. Yeah, so I've been spending all of my time on this mostly.
Cici, do you think Gary Gensler will actually do the right thing when it comes to regulate or how he looks at cryptocurrencies, because he seems to know about it and understand it maybe more than other regulators across the world?
Yes, I absolutely think so. I think Gary is one of the most knowledgeable people in the regulator space about crypto. I actually had a very brief interaction chat with him about crypto many years ago, maybe like a few years before he came to office. So I'm fairly confident that he will do the right thing. He understands crypto deeply. One of the things most regulators want to view crypto, at least Bitcoin, as part of their jurisdiction. So the SEC will view many crypto as a security, and the CFTC will generally want to view many crypto as a commodity. That's very natural because crypto has a bit of a property for each. Crypto is like a very new thing, but that has different properties that may fit into both bills. So we have to see how that shapes up. But I think SEC Chairman Gary Gensler is one of the most knowledgeable people about crypto in the regulatory space.
Cici, what about the UK? So there's a fairly big pushback actually from UK regulators. Do you feel like they're at the forefront, certainly when it comes to Europe?
I think Europe generally adopts a more open stance, but my general feeling is the established economies regulators are very reasonable. Regulations do follow innovation, so they will lag a few months, a few years after innovation. But once innovation comes to a certain scale, the regulators will step in. And so far, our interactions with most regulators around the world has been very collaborative. Many of them did issue warnings against Binance, and then we went back, we apologized, and then we said, what do we need to fix? So once we adopt that kind of approach, most of them are very collaborative, and I think most of them are very open-minded. They do come from the traditional space. They always, it's natural to want to regulate crypto the same as traditional financial services. That's okay for the first cut, and over time, hopefully we can evolve and adjust so that we can regulate this new asset class as a new asset class.
Which would look like what exactly, CZ? So because it's a new asset class, I mean, is there a comparable that they should be thinking about?
It's not easy to compare because that's how human thinking works, right? So we want to compare to something that we know. This is why the first generation of cars has levers for steering wheels. They don't have the wheel. But I think this new innovation is much more different from the traditional asset types. We should really ideally regulate it as a new asset type with new regulations, etc. But that's going to take some time. So the humans do well is we borrow from what we know and then we evolve from there.
Yeah. If you become much more mainstream and regulated, and it's a new asset class, is there a danger that actually some people feel alienated because I guess the point of cryptocurrency at the start was not to be mainstream?
Yeah, I think there's always a little bit of danger for that. I think as new technologies come in, my mom doesn't really use WhatsApp or chat tools or even Facebook, so she feels a little bit alienated when we try to talk to her using those means. So there's always a little bit of alienation for the existing players. But for most of people, though, they can learn and adapt to cryptocurrency products and services, and they can join this industry. And it's not just an industry; it's a fundamental technology that's going to power the economy in the future. So hopefully we can help to build those infrastructure services so people don't have to understand crypto to use it. So you don't have to understand how a car engine works to drive a car. So hopefully we can get it to that point where everyone can use it without being alienated.
Well, you're lucky. My mother is on social media, CZ, and let me tell you, she comments on every picture, everything I do and say, also on TV. She's probably commenting on us right now. When you look at some of the efforts, actually, that cryptocurrency had to do with the infrastructure bill and the fact that actually the tax didn't go the way that crypto makers and believers wanted it to be, do you need to just invest a lot more in lobbying Washington?
I'm not an expert there. I think there are many lobbying organizations and many lobbying firms who do work very hard on that front. And I think U.S. regulations do have a global impact because other regulators typically want to copy or mimic U.S. regulations, given that it's the most mature economy. So so we don't really have a lot on that front, but we do join industry organizations and try to support them. So I think lobbying is important to educate regulators and lawmakers about our industry, and also we can learn from what insights they can take back. So I think that those efforts, I think just a two-way communication is really, really important at this juncture, given that the regulators are looking intently at this space, the lawmakers are looking at this space, and the industry players are not small. We're still startups, but we're no longer that small, and we need to work. We need to have that two-way conversation and just be very collaborative about it. And hopefully that will really help us to build a better future faster.
Does the current recovery in crypto actually a function of expectations of a Bitcoin ETF coming out soon?
I'm not sure, to be honest. You can never pin one reason. There's so many different things happening in crypto. The fact that Bitcoin price is going back up now, there's probably 100 different reasons. I actually don't even know which one. All we see is people buying, more people buying than selling.
I mean, do you think we'll see a U.S. ETF anytime soon, actually?
I think we'll see it eventually. I don't know exactly when. So I actually don't follow it that closely, but eventually we'll see one. I hope to see one this year.
But is there danger that actually it makes non-traditional exchanges, if we do have ETFs, an ETF move, does it make exchanges like Binance redundant, or actually, does it become a valid competitor?
I think no. Short term is just because this ETF doesn't there are many different type of users. The guys who use Binance.com right now or Binance US now are the guys who are sort of in crypto already. They may want to hold their coins. They may buy a certain coin, withdraw to their own wallets. Whereas you can't do that with an ETF. Whereas ETFs probably servicing the traditional institutions quite a lot more. So there's definitely some overlapping users, and users may go one way or another. But we're so early in the industry. The industry is far from saturated. The penetration of cryptocurrency, probably general population-wise, probably less than 2%. So having more players offering more products will just make it easier to bring more users into this industry, and then we can all grow. So I don't see that as competition or overlap. I think that's a very positive thing. So I'm really rooting for the ETF to come out.
So you would see someone have an account with Binance and at the same time actually buy a more mainstream Bitcoin ETF?
It's possible. I think the guys who there are some overlaps, but there are guys who who just will only trade on a traditional exchange, and they will trade the ETF. There are guys who will be like, okay, I want to buy a Bitcoin and store in my own wallet, and they will do that. And then there are also many people around different parts of the world that does not have access to a to like say a traditional stock exchange, and for them it's actually just easier to buy on Binance.com. So there's different type of users, different type of use cases. On Binance.com, there's also many other products. I don't want to make this like a sales speech, but we have Earn, we have staking, we have a lot of other products that we offer people. So it's not exactly just one simple competition overlap kind of thing. But I think ETFs is hugely positive for crypto industry, and what's good for crypto industry is generally good for Binance.
Zizi, in general, what do you think needs to happen for the market to stabilize or to become a bit more normal? I mean, I asked you about why cryptos have been rising and actually stabilizing a touch, and you said it's very difficult to say, and we feel the same. You kind of sometimes don't really know where the moves come from. So what needs to happen for people to be able to to predict or at least understand some of these price moves?
Sure. I think for it to become more stable, the total market cap just had to get bigger. So right now it's about $2 trillion. When it gets to $100 trillion market cap, then you'll be, I think US dollars is what, 144 trillion total. When you get to that kind of market size, yeah, it's going to be more like a similar stability. You will still have small moves. That's as we see on the FX markets. In terms of predicting the market, predicting which way it's going to go, no one can do that. I think there are people who become very rich because they're very good at trading. Even in traditional markets, in FX markets, in stock markets, there's not one person that can really predict very accurately the price movements of an asset class that's freely traded. It's a mass psychology problem, so it's kind of hard to predict. At least I can't.
Yeah, Zizi, I can't either. Talk to me about hacking. How, are there steps actually to see? I know that you were involved with hacking, and actually the UK authorities, I think, asked you also to try and trace who was behind the hacking. Is hacking your second biggest concern after regulation?
I wouldn't say it's the second biggest one, but we do spend quite a lot of time on helping other people who have been hacked, helping victims, helping people to trace funds if the funds flown through Binance.com. And we do have a very sophisticated risk management prevention program. This is, I would say overall, security is the top priority for any business in crypto, especially for an exchange. So that's probably the most important thing that we do. But we do spend a large amount of time helping other people to track down bad players, including like a hack that happened on DeFi, which is a decentralized on the blockchain kind of project. It has nothing to do with us really, but we do try to help to whenever those kind of big hacks happen. As a large player in this space, we do have quite a lot of information on the user KYC, etc. So if a hacker's not careful leaving those type of information on a centralized exchange, then we can help to track that. So that's how centralized exchange work. But having said that, we don't have the authority to really enforce anything. So we have to work with law enforcement in different jurisdictions, and which we do. So we've been working really hard on that front, and we've got thank you letters from almost every single law enforcement agency in the world.
All right, Zizi, thank you so much. I've also been getting hundreds actually, of people with some hard-hitting questions. Where can I get your T-shirt, Zizi? So I don't know whether it's something that you can market as future merch, but thank you so much for joining us today, the chief executive there and founder of Binance. Now, this is what the markets are telling us. The focus is firmly on Jay Powell. A little bit later, we opened lower in today's trading session. You can actually see now the FTSE 100 pretty much unchanged. We're recouping some of the losses, earlier losses than we see. Then the Kiwi dollar, a big move after we saw one case one case in New Zealand actually leading to a 3-day lockdown for the whole of the country, and that's just ahead of an interest rate decision tomorrow. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. The US has opened a formal investigation into Tesla's autopilot system. That's after almost a dozen collisions at crash scenes involving first responder vehicles. An estimated 765,000 Tesla Model Y, X, S and 3 vehicles from 2014 onward are under scrutiny. The regulator has the power to deem cars defective and order recalls. Video game platform developer Roblox fell in late trading after reporting second quarter bookings, a measure of sales that missed Wall Street estimates. In July, daily active users rose 8% from the prior month to nearly 47 million. Roblox is trying to broaden its user base beyond kids, targeting office workers and older adults. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, the exodus from Libor gathers pace in Asia. Banks and regulators intensify their preparation for the benchmark's retirement come year-end. Up next, it's life after Libor. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, banks and regulators intensify their preparations for the retirement of Libor come year-end. While the transition has been somewhat sluggish in the U.S., the exodus from the benchmark has been gathering pace in Asia and in Britain. Well, joining us now is Bloomberg's editor for FX and rates, Will Shaw. So, Will, good morning. What's actually causing the gulf in progress between, for example, the UK and the U.S.?
So the UK has basically had a pretty good run of things when it comes to the Libor transition. Andrew Bailey, the Bank of England governor, says in June that the transition was pretty much done. Derivatives trading pegged to the main UK Libor replacement reached nearly 60% last month, whereas in the US, the equivalent figure is more like 7%. So the UK is much further ahead. And firms were told to stop issuing new bonds, loans and securitizations linked to sterling Libor from April, which leaves them far ahead of the US.
So, Will, there were also worries about the transition in Japan. What's the latest there?
That's right. So early in the year, there were genuine concerns from companies like Fitch about what was going on in Japan. One of the issues there in particular has been that there's several Libor alternatives that companies can use. So that means that there's a bigger risk that there won't be enough liquidity building up in any single one of them. However, there are signs that that's all improving very quickly. And the amount of derivatives trading pegged to the main yen Libor replacement actually tripled last month to 23%, which I think came as quite as a surprise to people. It certainly came as a surprise to me. Yeah. Like after these worries about Japan, suddenly there's been real movement over there, and things are getting moving.
Thank you so much. Will Shaw there with, of course, a look at Libor. Just a reminder that Bloomberg Short-Term Bank Yield Index, or BSBY, an alternative to dollar Libor, is administered by a subsidiary of Bloomberg LP, the parent company, of course, of Bloomberg News. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin, Kailey Leinz out of New York. We'll have a full market roundup to focus firmly on Jay Powell, and then also an interview with Cathie Wood. This is Bloomberg.
What you will see in the coming weeks and months will be decisive on all of these issues. A major refugee crisis, absolutely. And the question is, how are European and Western countries going to deal with their moral and ethical obligations to the Afghans trying to survive?
The West should hang its head in shame as we abruptly abandon Afghanistan to what will now be a civil war after 2 decades of effort.
I think sometimes in foreign policy, you've got to measure success not by what you accomplish, but by what you avert.
If anything, the developments of the past week reinforced that ending U.S. military involvement in Afghanistan now was the right decision.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, August 17th. Our top stories today. Biden's high-stakes bet, the president gambles that voters are glad to be out of a 20-year war and will overlook scenes of desperate Afghans fleeing the Taliban. Chinese tech stocks get squeezed. They're falling for a 5th day after Beijing's latest moves to tighten its grip. And call it Big Short the sequel, the short seller portrayed in the hit movie Michael Burry squares off against high-flying ETF manager Cathie Wood. She sits down for an exclusive interview with Bloomberg. Now, straight on to the markets, Kailey. We had a record high actually in the U.S. yesterday, not really filtering through because of lockdown in New Zealand, but also concern about the Delta variant and what it means for lockdowns in other parts of the world.
Yeah, and that all leading to a very risk-off day in the Asian session, Francine. Pretty much everywhere you look, from Japan to South Korea to China and Hong Kong, it was red on the screen. Your underperformance really coming from Chinese equities. The CSI 300 fell around 2 percentage points. And of course, in addition to all the fears around the Delta variant, the spread of COVID-19 in China, there is still concern over the regulatory crackdown, especially after China released overnight draft rules that would crack down on competition for online platforms. So that took the Hang Seng Tech Index down around 3 percentage points. Actually, its 5th day lower, and a big drag within that was Baidu. That stock down about 5.5%. As you were saying, though, Francine, in New Zealand, the focus really is on COVID-19, a single case leading to a national lockdown for 3 days, and that is dragging hard on the Kiwi. The New Zealand dollar weaker against the U.S. dollar by about 1.3%. And in Australia, you also have the central bank saying they will step up should lockdowns in Australia weigh on the economy. That has the Aussie dollar weaker as well by about 0.6%. Here in the U.S., of course, yesterday was a big day, the 49th record high of 2021 for the S&P 500, and the index now up 100% from its March 2020 lows. Does not look like that risk appetite is going to continue on today, because in the futures trading, S&P 500 futures down about 0.4%. At the same time, ahead of remarks from Jerome Powell and U.S. retail sales coming at 8:30 a.m. Eastern time, we are seeing a bid into treasuries. The 10-year yield down 4 basis points, sitting at 1.22. It is a broadly stronger dollar story in the G10 space today. That may be part of what is weighing on crude. WTI down for now a 4th day, its longest losing streak since March, Matt, trading right now at $66.94 a barrel.
All right, so we do see that price coming down a little bit. In terms of equity indexes, we see markets coming down as well, for the most part, across Europe. Take a look at this map, WMGO on the terminal, if you want to get to it in a quick and efficient way. And you can see that we have losses pretty much everywhere across Europe. There are gains in Austria, gains in Portugal. Sorry, that's Switzerland. Gains in Switzerland, gains in Portugal, and slight gains in the UK as well. It's really BHP Billiton. It's the miners and metals and miners companies just giving money back. I think BHP Billiton's dividend payout announced today was more than $10 billion. It's had a massive spike in profits due to higher prices. As a result, the FTSE, which is very heavy with metals and miners, is holding its head a little bit above water. You can see some interesting moves here in German bunds coming down to negative 50 basis points, as well as the pound. Actually, it is now back up above $1.38, but it was down below $1.37 momentarily. Both the pound and the euro losing a little bit of ground today against the dollar. So, Francine, it definitely appears to be generally risk off. Investors are looking to some extent for safe havens, but it's not quite so dramatic. I think everyone's waiting for Jerome Powell.
No, you're right. Jay Powell today at the town hall with educators, and then, of course, on to Jackson Hole, Matt. The focus is not only on inflation, but actually I love the fact that you really pointed to the FTSE 100, because if BHP, so it's dual listed at the moment, they said, look, they no longer want the dual listing. If they pull out of the FTSE, then you'll have a full recalibration of that index.
Yeah, and they're going to they're going to scrap their dual listing. They're going to make Sydney their primary venue, and it'll be interesting to see how the FTSE is rejigged. Of course, we'll miss them right? BHP Billiton has been in the FTSE as long as you and I have been working at Bloomberg, Francine.
Probably, since we've been alive. It's 2.3% also of the FTSE 100 index. Now a look at what else is ahead today. It's the first of a 4-day meeting for China's top legislative body in Beijing. In the U.S., we'll also get the latest read on retail sales. That's at 8:30 a.m. New York time. And then Fed Chair Jay Powell hosts this virtual town hall with educators at 1:30 p.m. We'll also get earnings from Walmart and Home Depot. So our team coverage also today takes us from Washington to Hong Kong and New York. We'll begin in D.C. with Jack Fitzpatrick of Bloomberg Government as President Biden offers a pretty defiant defense on Afghanistan.
I stand squarely behind my decision. After 20 years, I've learned the hard way that there was never a good time to withdraw U.S. forces.
Jack, I have to say this decision seems to have been condemned across the political spectrum. Is anyone behind the president on this?
Well, a lot of Democrats and even some libertarian types are behind the president's decision on that broader front to pull out of Afghanistan. But there's a lot of condemnation, not just on that decision, but on how it went about, and an evident lack of understanding of how quickly the Taliban would take over and surround and infiltrate Kabul very, very quickly. So there is a lot of condemnation as to the chaos and the number of people who are desperate to get out of Afghanistan still without U.S. aid. And there does appear to be a willingness probably in Congress to provide some sort of support as the U.S. sends a slight surge of about 6,000 troops there. But there weren't a lot of details in that speech about exactly what the executive branch needs, exactly what the plans are to deal with refugees. So it does appear there's sort of another shoe to drop in terms of understanding the U.S.'s plans on the details of how to pull out from Afghanistan.
It's on the money, Jack. So it's not about whether or not to pull out. That's a debate you can have. And I could see many of the world leaders agreeing that at some point you've got to leave. But the problem that has been pointed out by Angela Merkel, the chancellor here, Emmanuel Macron in France, Boris Johnson in the UK, is the way the U.S. went about it. And actually, Admiral James Stavridis wrote an op-ed piece for us today. You can see that if you type OPIN-GO on your Bloomberg terminal, saying the biggest policy mistake was failure to hold the Taliban to the agreement it negotiated with the U.S. before pulling out. Why did President Biden say, yesterday they were prepared for every contingency? It doesn't look like they were prepared for this at all.
No, it does not appear they were prepared for this at all. And given the other issue, this other specific issue that there's started to be some criticism, is the decision to leave Bagram Air Base and rely in the last stages on the airport in Kabul. It appears with everything we're seeing that an increased ability to get flights out probably would be valuable. It does seem like there's going to be more information about exactly what intelligence shortcomings there were. Again, the speech yesterday by the president didn't really get into the details of how and why this is happening the way it is happening. And it does appear there's pressure to get more information on that, and really just sort of a separate issue from the issues that the president addressed, which were big picture, the decision to withdraw from Afghanistan, rather than what might be numerous failures in exactly how they did that.
All right, Jack Fitzpatrick of Bloomberg Government, thank you so much. And turning to COVID-19 now, in New Zealand, the nation is entering a countrywide lockdown tonight after reporting a single case of COVID-19. It's the first community-transmitted case since February of this year. Enda Curran, Bloomberg Chief Asia Economics Correspondent, joins us now from Hong Kong. And Enda, in Hong Kong, they are now extending quarantine rules for returning residents, restrictions really all across the Asia Pacific. What does that mean for the growth trajectory?
So we are seeing very aggressive measures now by these two economies today to keep COVID at near zero levels of infection. Like you mentioned, New Zealand going to national lockdown for that period. The Prime Minister justified it by saying it's better to go harder for a short period than to implement softer measures that take a longer time to control the virus. The complication with New Zealand is the central bank was expected to hike interest rates tomorrow to become one of the first developed economies to do so, although economists now aren't sure if that will happen. Likewise, Hong Kong extending its quarantine to as much as 21 days in some cases for hotel stays for those visiting Hong Kong. Business people here, global business people, are not happy, and one person told us that the reopening of Hong Kong is postponed.
Yeah, and the regulation and actually a crackdown from Beijing is widening. Who are they targeting today?
It's kind of a drip effect. We're getting another sell-off in tech stocks today because we had some rules around IP and some rules around the use of algorithms for fake reviews of goods, for example, to sell goods. That's obviously impacting the big platform sellers in China. But the broad backstory is that investors are unclear as to where this crackdown is going, when it will end and how deep it will be. We know that President Xi Jinping is doing something of a major house cleaning operation of the Chinese economy. He's cleaning out those areas where he feels needs stricter oversight. Technology is one of those. We saw some new rules on that today, and that's why investors are nervous.
Yep, it seems there's new developments every day. Thank you so much to Bloomberg's Enda Curran in Hong Kong. Meanwhile, ARK investment founder Cathie Wood has been exiting her investments in China. She spoke exclusively with Bloomberg's Sonali Basak.
China has made it a priority to invest in innovation. I'm wondering if something's changing there, though. Since November, every month, there has been some new form of increased regulatory oversight, crackdown, social engineering, nationalizing the online education companies. It seems like that could be contradictory to their desire to become one of the most innovative countries in the world.
Sonali, who of course is our Bloomberg Wall Street reporter, joining us now. So Sonali, what were some of your other big takeaways from what Cathie Wood had to say?
Yeah, what struck me really is that she saw a shift while acknowledging that China has really been a leader in a lot of the technologies, particularly payment technologies, where now they're closing off in a way that she said can suppress the valuations for the long term. She confirmed that she sold out of a lot of these tech companies in her main fund. Of course, some of her other funds still hold some of these tech companies. What we also saw is that in the 13F filings, a lot of hedge funds also sold out of a lot of Chinese tech ADRs. Alibaba actually was one of the biggest sells across the entire investment universe. That's about 5,000 or so firms. So there are exceptions to that rule, Kailey. We saw some big buys in JD.com. So that's Viking, for example, had bought in Melvin, D1. Let's see if they still hold those companies, because again, these 13Fs are at the end of July.
End of June? Is it
June?
End of July
Correct.
or end of June?
You're always correcting
End
me,
of June.
Matt. That's correct. End of June.
Well, no. I only know because you and I had this conversation, Sonali, yesterday. And one of the interesting things that we saw on Bloomberg Radio, when we were on Bloomberg Radio together, is that Michael Burry is short ARK, right? This is the big winner from the movie The Big Short. He was portrayed amazingly by Christian Bale. What's the story?
It's interesting that you say that, because we know so many of the people that were in The Big Short, not many of them were right during the pandemic trades, right? But with Michael Burry, this position was about $31 million. We don't exactly know why he's shorting Cathie Wood, her main fund ARK, but what we do know is that he's been warning about lofty valuations for some time. This ARK fund was a moonshot. It hasn't retained that momentum so far. When Cathie Wood talks about her bets, she's talking about 5-10 years down the road. So no implication here that the short-term valuation makes sense or doesn't. On the other hand, Matt, we saw a lot of people buy into a lot more technology names during the second quarter, and a lot of these pandemic trades, including Moderna, Peloton, and Zoom and Netflix. So let's see the way this reopening trade takes shape through the rest of this year.
All right, Bloomberg Sonali Bosick, thank you so much. And I do want to take a quick check now on some stocks moving in pre-market trading here in the U.S. A big underperformer early on is Roblox, of course, the video game software maker. It reported second quarter bookings that missed expectations. As a result, it's down 6.3%. As I said, there were pressure on Chinese stocks in the Asian session, and that is true for their ADRs here in the U.S. in early hours, one of them being Alibaba, which is down about 3%. And finally, rounding it out, of course, Delta variant still front and center. That is putting continued pressure on travel stocks. Norwegian Cruise Lines looks set to decline for a fourth day in a row. It is down about 2.25% before the bell, Francine.
Yeah, a lot going on. We'll look at Norwegian cruises as we have COVID cases rising on some of them. Coming up, more on the latest in Afghanistan with Hameed Hakimi, the Chatham House research associate, and then a little bit later, Mathieu Savary, BCA Research chief strategist. This is Bloomberg.
Things have really sped up. The Afghan army has failed to provide any resistance or very little resistance for whatever reason. On this, we all made an incorrect assessment, and this wasn't just a misinterpretation on the part of the Germans, it was widespread.
German Chancellor Angela Merkel there on the global response to the situation in Afghanistan. Joining us now is Hameed Hakimi, research associate at Chatham House. And Hameed, I guess longer term, the big worry here is that Afghanistan could once again become a hotbed for terrorism. But for right now, I think the main problem the main concern that's been voiced by France and Germany especially is that we could have a refugee crisis on our hands. How do you see it?
Yeah, I mean, these two countries, along with other frontline European countries, have had these kinds of concerns about Afghanistan for a while, because in 2014-15 period, the so-called refugee crisis, in that period, the Afghans formed, from what I remember, the second largest group of asylum applicants in the EU. So I believe that they are obviously concerned because of the impact of such optics on the domestic politics in France, which has a strong far-right presence. In Germany, we saw the same implications for the Chancellor's party. So yes, I think it has so much to do with the fears in Europe domestically and the rise of populism. Then it has with Afghanistan, because Afghanistan's outward migration is not a new story, unfortunately, for Afghans. Remember, it's a long conflict started in 1979, with the invasion of Soviet Union.
Hameed, when the Taliban announce an amnesty and actually ask women to join the government, do you take them at face value, or is this just playing games at the start?
When I speak to people on the ground, and I've been doing that every day, mostly in the cities, but I've also spoken to a few people who are in the sort of semi-rural areas in the east, also in the west. There's a lot of uncertainty as to what happens next. And so far, the people that I've spoken to have said that when they have been out and about shopping, they've seen, obviously, Taliban forces are all over the place. They've replaced the posts that were previously occupied by the Afghan defense forces and police, and all of those checkpoints have been taken over by the Taliban. But it seems there is a calm. They're not bothering anybody, at least on the street, especially in Kabul. The view that I get from my conversations with Afghans is that so far things seem to be calm. Yesterday, I was speaking to an elderly woman who was jokingly telling me that the Taliban tried to come into the housing complex where they live, and they started to hand out these business card-looking pieces of paper to children to call the number if anybody was trying to harass them. And then children are running away because they were not used to the Taliban fighters being on the street. And then the Taliban fighters were telling them, we're not harming you, we're just here to give you a contact number. So there's a lot of new reality for people to get used to.
Yeah, it's definitely a new reality, Hameed. Who within the international community is likely to be most cooperative with Taliban leadership?
Well, that's a $1 million question, but you have to look at the signs on the signs out there. So, for example, as far as the dialogue and the consultation is happening, I think it's a little bit disingenuous of the U.S. administration right now to say they had nothing to do with this, because they, in fact, were the ones who facilitated the Taliban's return, pretty much by the deal and prior to the deal in Doha. Through their consultations, they assured the Taliban that there was a deal to be made, and that's why the Taliban took the deal. So the Americans will have to do something about their formal interactions with the Taliban beyond Doha. The Chinese, Russians, the Turkish embassy, and also, from my understanding, the Iranian embassy, I haven't heard any news that says that they're evacuating. The Pakistanis, from my understanding, I think they're increasing their capacity. So I think it's only the Western
developments we'll be looking at very closely. Hameed, thank you so much. Hameed Hakimi, the research associate at Chatham House. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, the U.S. government is preparing to offer coronavirus booster shots as soon as next month. The Biden administration is expected to recommend the shots be taken 8 months after people receive their second vaccine dose. The U.S. is facing a renewed wave of infection fueled by the Delta variant. So, Kailey, you could soon have a shot sooner than actually Matt and I. Coming up next, we talk a little bit about the Delta variant and markets. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Matt, there's a great piece actually by John Authors talking about inflation. So we're again on inflation and taper watch because of Jay Powell today, and then Jackson Hole next week.
Yeah, I think Jackson Hole is going to be key. Everyone's going to be paying very close attention to it. Marcus Ashworth told me that the Brits aren't invited. I guess Europeans aren't invited either. So it's going to be an all-American event pretty much, unless you're already over there. The inflation issue, as Mohamed El-Arian wrote, all of the economists still have both hands. So it's not solved yet, and it's still going to be a debate. I'm sure it still will be when we get to Jackson Hole.
I know it is actually, I know it's a little bit of a flippant comment, but I used to love seeing the central bankers kind of in their slacks, maybe with a little bit of, running shoes, hanging out in Jackson Hole. So the fact that the governor, Andrew Bailey, is not going this year will be disappointing to many. But Kailey, it's not moving the markets.
Not yet. I'm sure it will come next week, Francine. But it's interesting in the markets this morning, specifically in the European session. While we were lower for a second day, the Stock 600 has erased pretty much all of those losses and now is trading essentially flat, led higher by basic resources. A recovery in that sector taking shape on this Tuesday morning. Here in the U.S., though, after that 49th record high of the year for the S&P 500 yesterday, doubling since its March 2020 low, futures are in softer territory, shall we say, in the red by about 0.4% on S&P E-minis. You are seeing a bid coming into the bond market ahead of those remarks from Fed Chairman Jay Powell and U.S. retail sales data. We're down about 3.5 basis points on the U.S. 10-year yield. 123 is where we sit, and broadly it is a stronger dollar story in the G10 space today. The Swissy, the one exception to that. As for some movers in pre-market trading in the U.S., of course, we were tracking the moves in Chinese tech stocks, or in the Asian session, I should say, we were checking the moves in Chinese tech stocks, but we are also checking them in the U.S. session when it comes to those ADRs. You have Baidu, JD.com, each down around 3.5%. Other stocks to watch include the travel sector as the Delta variant weighs on sentiment. You have Carnival Cruise Lines down about 2%. And then just keeping an eye on Tesla as well. Looks set for a third day of losses. Of course, U.S. regulators looking into autopilot. Matt, that stock down about 1.5% in early hours.
All right, I am looking at stocks being off, Kailey, but they haven't been off that much. Check out this chart that my producer Dan Curtis put together for me. And for those listening on London DAB Digital, I will walk you through it, but I will also tell you, if you go on the Bloomberg terminal and you type NI chart go, you can get really treasures riches in terms of charts, and they will be annotated. So I think they're actually even a little bit stronger. But what you see here is the S&P 500 over the last year, the red marking the dips, the big dips that we saw, of course, at the beginning of 2020 when the pandemic first hit. They were, in hindsight, a great buy, and so has every dip since then been. But we just have seen smaller and smaller dips, and now, because of that buy the dip mentality, there is no more red on the screen. Joining us now is Mathieu Savary, Chief Strategist at BCA Research. Mathieu, is buy the dip continuing, going to continue to be the strategy to stick to?
Overall, yes, it will remain the strategy to stick to. We could see in the fall a bit of a bigger correction to come due to the fact that we could start to see some withdrawal of liquidity. There is obviously risks around the Delta variant, but ultimately the big story remains the fact that the global economy is reopening. CapEx will remain strong over the course of the next few quarters. We'll see inventory buildup happening, which will supercharge economic activity. So overall, the environment remains positive for profits. And even if there's a bit less liquidity, the general environment with the ECB injecting liquidity, the Bank of Japan doing so, the Fed only marginally removing liquidity, and yields still very low, is still very supportive for risk assets.
Mathieu, Deutsche Bank is actually a little bit sanguine about the future, saying they're expecting some further deterioration in the outlook over the weeks and months ahead, mainly because of COVID cases, especially on a global basis. Do you buy that? Are we going to see a bit of volatility as we kind of trying to get to grips with the Delta variant and see whether people need booster shots, or you pick up the vaccination rate, or are you just buying the dip no matter what?
If the market declines by 7 to 10%, I'm a buyer at those levels. At the end of the day, yes, there is a Delta causing problems, but we've seen that governments around the world have very little appetite for the kind of lockdown we experienced in 2020 and in some places early 2021, in part because the vaccination has increased significantly and the general population simply doesn't want to see the kind of measures that were put in place. So Delta is one thing. What really matters is the economic impact of Delta. And here, this lack of political will suggests that, yes, there is going to be fear, but ultimately the economy should remain on track to reopen. So I'm inclined to fade that.
Okay, what's your take on tech? So there's quite a lot of movement on these pricey European tech stocks, and at the same time, it looks like the chip shortage will continue.
So here, the biggest issue when it comes to tech is the fact that what's going to happen to yields on a go-forward basis. So our view at BCA as a firm is that yields will actually increase due to the fact that the technical underpinning of the recent bull market, the recent rally, in global bonds is essentially over. We've seen the oversold condition that prevailed in March pass. Yes, there's the slowdown in China. That's worrisome, but at the same time, the general positive backdrop for the global economy, since it remains in place, suggests that yields actually have upsides. So while tech stocks in Europe or in the United States have upside in absolute terms, they are not our favored way of playing the recovery. Instead, we prefer to play industrial stocks, financials, consumer discretionary, those kinds of shares that are more direct bet on the real economy than tech stocks as a recovery plays.
Are those stocks still looking cheap to you, Mathieu?
They are a lot less cheap than they were, but comparatively to those tech stocks, they definitely are a lot cheaper in relative term. But the easy money definitely has been made. That's the bad news in the story.
Mathieu, don't fight the Fed has been an adage to live by in these markets. You're saying the rally in global bonds is over and that we're going to see upside to yields. That's a call that's burned many investors. What makes you so sure?
Well, from the perspective of looking forward, as I mentioned, When we were in March and a lot of the calls were getting more and more bearish on bonds, there was a big problem, which was that on many metrics, the bond market had not been that oversold in more than 20 years. So there was already a lot of optimism, growth optimism embedded in bond prices. This is a lot less true right now. So that's why I'm a lot more comfortable with the dynamics in the bond markets in terms of betting on higher yields. Secondly, financial markets are forward-looking, and they were in the recent decline in yield that we've seen since March, discounting the marginal deterioration in economic surprises that we've seen in the summer. So now what we need to think about is what will happen over the course of the next 6 months, and considering the amount of infrastructure spending that's going on, the need for rebuilding inventories, which will add to economic activity, the large capex plan going on, all of that points toward higher yield on a go-forward basis. So that's why I'm much more comfortable than I was in the spring with the pronostic for higher yields.
Mathieu, obviously right now the world, it seems, is focused on the situation in Afghanistan. The markets decidedly not so. Do you think geopolitical risk is at all priced in?
When it comes to the impact of things like Afghanistan, it's minimal for the market. What is the most worrisome at this point in time remains the relationship between China and the United States, with flashpoints in Taiwan in particular. For that, we don't think the market is adequately pricing this risk. So this is something that keeps us awake at night, and we recommend essentially underweighting Chinese stocks and Taiwanese stocks as hedges against this danger.
Mathieu, thanks so much. Mathieu Savary, their chief strategist at BCA Research. Now, coming up, it's the largest cryptocurrency exchange in the world by volume, part of our interview with the Binance chief executive and founder. That's coming up next, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Rebecca Pringle, National Education Association President. This is Bloomberg.
U.S. is very mature on the crypto regulation part. They're leading now. They have a cryptocurrency exchange listing on NASDAQ, which is very positive. Regulations should really keep in mind of technology innovation. Crypto blockchain is going to be, I believe, it's bigger than the internet. So killing innovation in a certain jurisdiction will have very long and far-reaching financial impact, negative financial impact. So hopefully we can avoid that in all the places in the world.
It is not something that we would invest a lot in at this point. You know, there's a lot of volatility, there's a lot of risk, which is not something that we're necessarily getting paid for right now. But for sure, we have the ability, because we are long-term investors, to explore new roads. And so cryptocurrency is one of them.
Well, that was CZ founder and chief executive of Binance, and Kim Liu, head of the Columbia University Endowment, talking cryptos. Now, you can catch more of Liu's interviewed in tonight's episode of Bloomberg Wealth with David Rubenstein. That's at 9 p.m. New York time. Now, let's get to our crypto expert. He's Eddie van der Walt. He's from the Bloomberg MLive team, where he's editor, and he joins us now for more on crypto. Basically, every time we have a big interview, I go to you and say, like, wait, what are you thinking about? And what you were thinking about is actually, why is crypto risen so much? An answer, a question that CZ didn't have the answer to.
Yeah, I think so. I think it's really interesting to see this bounce back in cryptocurrencies, because the previous times that we had drawdowns, the drop was 70% or 80% or more. And this time around, Bitcoin just sort of stabilized, and it's pulling in the institutional investors. And I think the hope is that we get a US ETF, that a US ETF will bring back and widen the audience to cryptocurrency. So I think that is where the main attention is at the moment.
And while we have obviously Canadian ETFs already that American investors can buy, the interesting thing, and I really am looking forward to this Liu interview with David Rubenstein. The interesting thing to me is she said they're not getting paid yet for the volatility, for the danger. And I think about Cardano and I think about DeFi and, crypto investors looking for yield. Is that gaining steam right now, Eddie? Is that getting to be a bigger and bigger part of this market?
I think you're spot on there. I think this is really where the action in the crypto space is where, I think Bitcoin is really interesting, but it's pulling money into the space, and then people are using it for projects like Cardano and Ethereum, where they are creating a whole parallel financial system, really, which is offering people yield and all sorts of interesting things. Yield, which we haven't seen in normal markets for a long, long time. So I think this is a really interesting space, and I do think that battle over the heart of crypto is raging right now.
Eddie, battle over the heart of crypto raging. Also, the battle over supply and demand in the oil market seems to be waging as well, given how far oil is come down in July and August. Is that mostly attributable to China?
I think China is a big part here. I think China matters, obviously, for the oil markets. It's a big consumer. The Delta variant matters. People are worried about that. But I think there's another factor that people are a little bit discounting at the moment, and that's the whole OPEC, the whole OPEC situation. OPEC is looking towards pumping more oil, as soon as they can. We saw that with the Emiratis earlier this year, and I think supply potentially is a bigger problem for the oil market at the moment than demand is in the long term.
Eddie, I'm torn because I want to talk to you about oil, but we also have a great viewer question actually asking how long before ESG is going to hurt crypto. And we're seeing, I don't know whether, for example, BHP is selling some of the oil assets because of ESG as well.
Yeah, I thought that's a really interesting story I think it's a really interesting story for BHP and for the wider commodities markets. But you're right. This is about crypto too. And I think it's a bigger problem for Bitcoin because, of course, Ethereum and these currencies are moving beyond a model, of proof of work. So they are not really bound by having to, burn fossil fuels to create new blocks on the blockchain. So I think it's a bigger problem for Bitcoin, and it's not as quick to adapt as some of the others.
Yeah, I think that's a great point, Eddie. It's not as quick to adapt as the others. It can change, and it will change, but it's not going to be as fast as you see it with Ether, or especially with some of the smaller coins out there. I want to get back to oil and just ask about, President Biden has asked OPEC to pump more, although the IEA has said demand is going to come down. Is OPEC going to listen to the president's pleas, and do you believe that demand drops? Because that's just a recipe for falling prices.
Yeah, so I had a look at the U.S. president, the previous U.S. president, President Trump's influence on the oil market a while back, where I crunched some of the numbers and said, look, if when Trump called for lower prices, more pumping and so on, what happened to the price? Never mind what happened to supply. And we saw that there is an immediate reaction in the price lower, but within a week that faded to almost nothing in most cases. Now, whether this president has more of an influence, and I think, OPEC will certainly sit up and pay attention. They're not going to ignore the U.S. president. Nobody in the world does. But, the OPEC has its own problems, and they are facing, the countries are facing budgetary pressures in and of themselves. So potentially, I think they may want to listen, but they may not be able to.
Eddie, one final quick one from me on gold, up 3 days in a row. Is that just a haven bid?
Gold's really been hard to trade of late. People have struggled to call the gold market, and that's because gold has not really done exactly what you would expect given changes in the dollar and in real rates. And I think part of that story is that gold is a little bit more forward-looking at the moment. Gold's looking towards Jackson Hole. And Jackson Hole, I think we're expecting the Fed and other central bankers to give us more of a view on whether they're going to, look more towards inflation or more towards keeping growth going. And I think that's what's making gold hard to trade. But at the moment, certainly, there's a bit of wind in gold sails.
Eddie, thank you so much. Bloomberg's Eddie van der Vat there from our MLive team. Everyone should go and check out MLIV Go. This is Bloomberg.
The American presence was essential to keep the 9,000 Allied troops there, and it provided a psychological and military floor for the Afghans. So no, it wasn't going to give you peace. It wasn't going to give you a military victory. What it was going to do is avoid bringing about exactly what we're seeing on our screens. And I think sometimes in foreign policy, you've got to measure success not by what you accomplish, but by what you avert.
Well, that was Richard Haass, Council on Foreign Relations president, saying the U.S. troops were vital for maintaining the status quo in Afghanistan. And maybe more than the decision of getting out is how it was done, that, of course, Joe Biden will have to face up with its allies. Now, Haass spoke yesterday with Tom Keene, co-anchor of Bloomberg Surveillance, who joins us now. Tom, I know you're looking at, of course, Afghanistan, the political implications for that going forward, and then you have a wonderful chart looking at the 210s.
Well, maybe they're linked together as well on global slowdown. First, on Ambassador Haass, he took a very controversial stand yesterday. Twitter was lit up like a candle off of his comments, Francine, on we should have stayed. I mean, it's as simple as that. We also talked to Thomas Barfield, arguably the #1 authority on Afghanistan in America, and he made clear the Taliban is different this time than they were a good 10, even 20 years ago. The chart shows the slowdown that is here. John Farrow just put out on Twitter, Francine, the Bank of America growth expectations, and to focus, it's back to April of 2020, only 2 months, maybe 7-8 weeks after the pandemic really clicked in. We roll over again down near 100 basis points. We're not there yet, but it's something worth watching into this week.
So what growth expectations then are coming down? Is that the point, Tom?
Yeah, I think on the soft data is the Empire Manufacturing used to be a tertiary statistic. Nobody paid attention. Yesterday they did, Matt. It was very weak. That's out of Buffalo, New York, and shows 200 manufacturers, what they're doing. And there's any number of other statistics leading up to retail sales today to see this boom economy, exactly where is it?
In that fund manager survey as well, Tom, 84% say a taper before the end of the year. You think we'll get any clues on that from Jay Powell today?
Yeah, it's a parlor game. I mean, you know, out at Jackson Hole, they'll hold crystals in a seance like it's Sedona, Arizona. I have no idea, Kailey. The taper thing is simply, we're data dependent. I keep saying this. Farrell puts $1 in a jar every time I say data dependent. We're data dependent. That's all there is to it.
Data dependent. Surveillance is not data dependent because every day you show up with news that the people need to know. Tom Keene, their co-anchor of Bloomberg Surveillance. Now, this is what else we're watching for the rest of the day. And Kailey, you're looking at retails.
Retail everything, Francine. Retail sales data at 8:30 a.m. Eastern time. We are expecting a decline of around 0.3% month on month. So what exactly is happening to consumption, especially as concerns around the Delta variant rear their head again? Plus, we also get retail earnings from two big names today, Walmart and Home Depot. They're coming at 7 a.m. and 6 a.m. respectively for Walmart. How much are they able to retain their margin, pass on higher input costs to consumers? And then, of course, Home Depot, they're facing really, really tough comparisons, Matt, because everybody renovated their house during the pandemic. So we'll see what those same-store sales look like compared to 2020, Matt.
Yeah, you know, this is huge, Kailey, and that's a great full screen. I want to steal that for my program later on. I think this is really important to watch for the markets in the shorter term. In terms of the bigger picture Afghanistan situation, I've got my eyes on the Taliban right now. We just heard from Hameed Hakimi that people are voicing calm in his anecdotal, research from calling around with the Taliban taking control. And Francine was talking about the AP report that the Taliban has invited women now to join its government. So I think that's, maybe there's a tiny little piece of heartening news to take from this whole big tragedy. And if they change their ways and become more moderate, maybe that's making the lives of people in Afghanistan marginally better. We'll see.
Yeah, we'll see. I think it's early days yet. What I'm watching, of course, is the Fed chair, Jay Powell, hosting a town hall today. It'll be interesting to see whether he gives any clues, of course, of tapering. If you look at some of the market color around this, so the rebound since the open on Monday in hedging, for example, has given this risk-off sentiment following China data misses, pandemic concerns, and geopolitical risks. And so we'll see whether Jay Powell continues along that trend or whether he raises any eyebrows later today, or the minutes FOMC's latest meeting turn out to be interesting tomorrow. So there's quite a lot going on, of course, in central banks. More Bloomberg Surveillance coming up ahead. We'll hear from Francis Donald of Manulife and many more. This is Bloomberg.